Hi there and welcome to the second episode of our six-part series in financial planning for medical students and doctors in their first year. Right, so my name is Joe. As always, please send me a WhatsApp, send me a voice note, send me an email if you have any questions regarding today's episode. Right, so today we're going to speak about a budget. For most people, it's very intimidating. They don't know where to start. What is a budget? How should I go about it? Should I really have a budget? Is it not old school? So today I want to talk about more about a budget, and there's various types of budgets or templates of budgets. But I think this one I found works quite well. It's called the 50, 20, 30 principle. So for each of every one of you, I will, if you want a template, please send me a voice note or an email. I will send you a template so you can complete this, because each person's budget will look different because we're in different circumstances. But today I just want to touch on the principle of setting up a budget, and specifically the 50-20 principle, which I find works quite well. All right, so I wrote some of the things down already because I realized when I write, it makes a scratch sound. No one likes that sound, but so I'll try not to write as much. But here we go. All right, so when setting up a budget, where do we start? Just keep this in mind, the 50, 20, 30 principle. Right, so first of all, you have your income. Like we mentioned, as first year's next year, let's work with, say, more or less 60,000 before tax. Then your tax will be deducted. So your net income will be, say, let's work with 60,000. Then tax. Tax is difficult to work out now, but we will talk about tax in the fifth episode. There's one or two ways that you can minimize your tax through a retirement annuity and medical aid. But when you earn a income, a salary, there's not a lot of ways you can actually decrease your tax payable. But there is a couple of ways. We'll touch on that in the fifth episode. Yeah, in episode 5. So let's say your net income, let's just work with, let's make it a nice round, 54,000. Because I think your gross is going to be about 62. But for instance, let's work with 54,000 Rand for your net income. Then where do you start? You start with your expenses, but your need to have, your must haves. So this, first of all, we look at your must have expenses. So what is that? What is must have expenses? Right. It's your accommodation, your rent, or whatever the case may be, your car, groceries, Wi-Fi, which used to be a nice to have, but these days it's a must have, water, electricity, cell phone, all of the things that you actually need to have in order to just sustain a decent lifestyle. Not the nice to haves, we're going to come to the nice to haves, but this is really your must haves. You write that down. Most of it will be debit orders as well. First of the month, it will go down. That should more or less, give us to our first principle, be 50% of your net salary, more or less 50%. If it's a lot more, so let's say it's about 70, 80% of your net salary, then we know the car you bought or your accommodation is too expensive for your salary. This just gives us an indication. If it's a little bit more, if it's a little bit less, that's perfect. We want to get it to close to 50. So that gives us an estimate. That gives us some structure as in our budget. So that should more or less be 50%. So more, in essence, that should be about more or less 27,000, which is it's quite a lot of money but it adds up quite quickly. But then you know the car you can buy, the accommodation, the groceries, the Wi-Fi, it all should add up more or less to 27,000. Then what the big mistake most people do, what we normally do is we go and celebrate. We go in for a shopping spree. We go buy. We go eat out, socialize when we can again. and we spend our money. And then you come at the end of the month, you don't really know what you did with your money. We see this all the time. So we're going to bypass that. We're going to make sure that first, before you do spend it, because there is time for nice to have things and to enjoy your money, because you work hard for it, you must enjoy it. But first, you want to take 20% of your 54,000. That's quickly, it's about 10,800, if I'm correct. That, we first want to take that and we want to invest it. We want to save that for the future. We're going to come to investments in more detail in session number 4. But you first want to, and you want to automate that. So before you get your salary, you pay your must-haves, and you want to automatically pay into your investments as well. It's different types of investments. First, for your retirement annuity, depending on the goals we set. Then, in the previous episode, your retirement annuity, short-term investments, long-term investments, tax-free saving, and then property if you decide to go into property one day. But that we want to automate. We want to, first of the month, we put it into our investment account, and that money grows and grows and grows gradually. So you make sure that you do spend you put money away. Sorry, and another important thing I forgot here is obviously your medical aid and your risk insurance, your life cover disability, which we will cover in episode number 3, the one after this. What type of insurance you should look out for. Right. So then we have your must-haves is covered. You're investing, putting money away for one day, and then with the money that is left, you can then go and spend it on the nice-to-haves. And for each person, this is different. Some people like socializing. Some people like eating out. Some people watch Netflix the whole day. Some people go on a shopping spree. That's each to their own. And you can then spend this money with clear conscience. You've already paid all your must-haves. You've invested. You've been financially mature. Now you can go and spend it. And if you have zero money left at the end of the month, that's perfect. We've done a great budget. Everything is in place. And this should then be more or less your 30,000 or 30%, or well, the amount that's left. And in this example, there's more than enough. That's about 17,000. Just to make a quick estimation. No more. That's 37. Yeah, so it's about 17,000 that you still have left to spend, which is quite a lot. So I know once again, each person's circumstances is very different. If you have a loan, then first of all, you want to pay off your loan as well. So that we will incorporate. But that's where you sit with a wealth manager and they work around your personalized budget, because this gives us a nice template, it gives us a guideline, but for each person, it will look completely different as well. But this is just to give us more or less some structure in what we are doing in a budget. And you also want to enjoy your money. Make sure that you do enjoy your money. You go and celebrate when you get your salary, but make sure that you do. And this is where you work forward. This is where we build the net worth. Remember in the first episode or in the introduction, that's the mistakes people make. They look at their income and they just spend it. There's no building of your net worth. And here we build your net worth. So make sure you incorporate that before you go and spend. Because most people make the mistake of they earn, they expend, nothing left. Next month, start again. I earn, spend. You're not really building wealth. This is where we build wealth. This we're going to come in episode 4. We're going to cover it. Next episode, we're going to talk about medical aid and risk. Right, so if you have any questions, please send me a voice note, send me an SMS, a WhatsApp, or an email, and we can talk about specifically budget or any questions you might have regarding this. I think I covered most of it. If I did forget something, just remind me. We can, like I mentioned, we can have a frequently asked questions episode at the end as well. But this is to give you some guidelines as to a budget, and it shouldn't be daunting, but it should be very good, or you should know where your money is going, and this will give you a nice guideline. Right, that's it for budgeting. Go ahead, start with your own budget. And even before, sorry, to end off, before next year starts, do it now in the months leading up to next year. Then you can see more or less what you are going to spend your money on and make sure you plan. That's it. Thank you.